Hi everyone. Um, the topic today is money and you. Um Money is a very important aspect of life. Uh, of course, money is not everything, but managing money, whatever you have, is becomes a life skill for everyone to be peaceful and happy. So, I'm going to cover a little bit about what is money, what do you mean by your net worth, what are these accounting terms called balance sheet, profit and loss, assets, liabilities, net worth, income, expenses, and profit and loss, and how is the relationship between money and time, and the relationship between money and ethics. So on this first slide, let me start with what is money. And I think everyone knows money, but um, from a definition point of view, money is a medium. It's a medium to exchange for goods and services, or a product or services. So money is needed for survival, money is needed for luxuries, money is needed for learning, money is needed for health. So it's something which covers all aspects of your life, and it's something which you have to control and you have to manage. What is your net worth? Um, I differentiate between net worth as a person and financial net worth. So your net worth is a combination of many things at different points of life. It's the knowledge you have, it's the skills you have. Skills is basically knowledge which is being applied for a purpose, so same knowledge, and also the attitudes which you possess. So this combination of knowledge, skills, and attitude gives you a worth which which helps you to earn money, helps you to earn a status in a society, and helps you to grow and survive in your life. Part of all this, outside this, is your financial net worth. So I think it's important to understand that financial net worth is a very small portion of your total net worth. And in this topic and in this presentation, I'm going to be more focusing on terms in the financial net worth and a small method of how you can continuously monitor and improve on your financial net worth. In my presentation, I think this is the most important slide which all of you should be able to remember and take it forward in your life. Most of you must have heard of two statements, which is quite common in the businesses, in companies, and so on. This is called the balance sheet and the profit or loss statement. I have shown the left side as the balance sheet of this screen and the right side as a profit and loss. The important thing to remember is that balance sheet is a kind of a status, your financial status, as of a particular date. It can be any date. Typically in India, the financial year ends in 31st March of that year. So it's April of the previous year, April 1st to 31st March. So you will typically see balance sheets made as of 31st March for a company. And you can do that even for yourself. The balance sheet has two major components. And the difference between the two components, assets and liabilities, is what is your net worth at any given point of time. Assets can be defined as something which you own. It could be movable assets, it could be immovable assets, it could be land, building, it could be equipment, it could be a motorcycle, a scooter, a car, which are movable assets. It could also be cash which you have, both in cash form as well as in your bank. It could also be in investments which you have made. So these are all combined together are called your assets. And below that is the liabilities which you owe people. So assets is what you own and liabilities is what you own. And there are different type of liabilities. Maybe you have taken a loan, so that becomes a liability. That means you have to repay the loan. Maybe you have, incurred a penalty which you have to pay after 3 months to the government or to someone else, and that is also becomes a liability which you are owing to pay. So basically, at any point of time, if you want to know your financial net worth, you total all your assets, the value of your assets, total all your liabilities, and subtract the liabilities from assets, and you get the net worth. So balance sheet is a kind of a report which allows you to see what are your assets and what are your liabilities and what is your, and calculate the net worth as a particular date. On the right side, let's come to a profit and loss account. Now, typically a profit and loss is created for a period of time. It could be for a day, a month, a quarter, or a year. And in the company's reporting, normally it is done for a year. But of course, from a monitoring perspective, it can be done for a month, it can be done for a week, it can be done for a quarter. Now, basically, the profit and loss is like your transactions for that particular period of time. And the transactions primarily in the form of income and expenses. That means what you earn during that period of time and what you have spent during that period of time. So just like a balance sheet, your income minus expenses will give you either a profit or a loss. Profit obviously is when the income is higher than the expenses in those period of time, and loss is when your expenses are higher than income. Now, at the end of the year, let's say this profit and loss is created for April 20 to March 21. So end of March 21, you would know what you have spent in the previous 12 months and what you have earned in the 12 months. The difference between two could be either a profit or loss for that particular period of time. Now, how does that get into your balance sheet? Typically at the end of, let's say, 31st March, if it's a profit, you add it to your assets. So assets grow up, liabilities remain the same, so your net worth actually goes up. If you have had a loss during that 1 year, you add the expenses to your liabilities. So liabilities goes up, and your net worth comes down. This is how it is maintained. So at the end of that period, 31st March. So let's say on 1st April, your profit and loss statement will be a zero income and zero expenses. And then for the next 12 months, it is recorded to see what all you have earned and what all you have spent. Now, within this 4 major groups, you have what is called accounts. Accounts is again a grouping of certain type of activity. For example, income, there could be an account which says income from sales. You have a product and you're selling the product and you get income out of that sales. So that can be a group within the income. For example, expenses, your telephone expenses or communication expenses could be one group. So at the end of the year, you'll know what is the total money you have spent on communication. So understanding these, 4 major groups and understanding the individual items help you to continuously monitor where you are on financially and what you can do to improve it. Obviously, the whole target is to improve your net worth. So you obviously keep finding ways to improve your income, increase your income. You also find ways to reduce your expenses continuously. You also add to your assets the profits which you earn. Some you use, some you add to your assets so that the net worth increases. And if you have liabilities, you keep reducing your liabilities so that again the net worth increases. So This is a good way to, for an individual or a company or even a country to understand where they are from a financial point of view. Another aspect of money is the value of money over time. 100 rupees today buys, let's say, X number of, a few kgs of a particular vegetable. And the next year, if the price of the vegetable goes up by 5-6%, the same 100 rupees is going to get less vegetables. Now, this is a concept which many people forget, and it's to do with the inflation. That means cost of living in a society. And different countries have different rates of inflation recorded, and sometimes it goes up, sometimes it goes down. So basically, if you save 100 rupees, if at the end of 1 year, if you're going to get, let's say, on a deposit, you get about 5-6%, and the end of year, it becomes 106%. Please understand that 106 rupees is not higher than 100 rupees as far as its value is concerned. Because what you can buy on 106 rupees is kind of equated to what you can buy on 100 rupees today. So this is an important aspect to remember all the time, because sometimes people, forget about time aspect of money. And this is more important when you start to plan for future savings or, for future projects with your money, and you start saving. You have to save for the value of money at that period of time. Let's say in 5 years' time. Suppose today you need some 100 rupees. You think you need 100 rupees for a particular aspect, a particular expense in life. If you're going to plan for the 5 years from now, you cannot have the same 100 rupees. You may have to have 125 rupees to get the same thing 5 years from now. So this is one aspect which I feel that everyone should know, and they should plan accordingly. What is money and ethics? Everyone tries to make money. Some make it ethically, some make it unethically. Some use corruption to make money, some use criminal activities to make money. So it's important to keep focus on earning money, but at the same time earning money in an ethical manner. And not only ethical manner, you have to also make sure that you are within the law of the land, because that also becomes illegal. And anything which you do unethically or illegally has a potential problem for you in future. You never know when it happens, when it may trouble you. So if you want peace of mind and happiness always, these two becomes very important. And the third aspect is, of course, money within your conscious. You can't make money by, destroying some other person or some other environment or maybe another group of people. You have to make money within your conscious. And if your conscious is to be happy and also to make other people happy, you'll make money in a very balanced way so that no one is affected by your making your money. So this is what I wanted to cover. In a very short way, I try to record a presentation for people who could not attend my 1 hour presentation. Thank you.